Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 17th of July. The US dollar came under renewed selling pressure on Friday, with the dollar index reaching its lowest level since September, following the release of disappointing inflation and retail sales data for June. Even though the core CPI rate held steady as anticipated, the headline rate dropped by more than expected. Meanwhile, both the headline and the core retail sales rates missed their forecast for an increase and instead declined. The worse than expected CPI data called into question the view of some FOMC members who noted that the recent softness in inflation is transitory. This was also touched upon by Chair Yellen in her testimony last week, when she said that even though low inflation is owed to temporary factors, there may be more going on. What's more, the decline in retail sales suggests that Q2 GDP growth may be worse than previously anticipated. Coming on top of the weak GDP print for the first quarter, which the Fed also viewed as transitory, another quarter of lackluster growth could lead FOMC officials to recalibrate their view about the growth outlook as well. Combined, this soft data pushed back market expectations regarding the timing of the next Fed rate hike, with the Fed fund futures currently suggesting less than 50% probability of another rate hike this year. With no Fed speakers or US economic data on the agenda this week to distract the investors, this negative sentiment could continue to weigh on the dollar over the next few days. Dollar yen tumbled on Friday on the disappointing US data. The pair fell back below the downside line taken from the peak of the 11th of January and below the support now turned into resistance of 112.85. The slide confirmed a forthcoming lower low on the 4-hour chart and perhaps signaled a short-term trend reversal. Therefore, we switch our view with regards to the short-term outlook to negative for now. Even though we may see a small rebound due to some short covering, we would expect the bears to take charge again soon, perhaps near 112.85, and aim for another test at 112.25, where a break is likely to open the way for our next support level of 111.80. Now moving to New Zealand, during the Asian morning Tuesday, New Zealand's CPI data for the second quarter are due out. The forecast is for the nation's inflation rate to have declined to 1.9% year over year from 2.2% previously. The case for a slowdown is supported by the ANZ inflation gauge, which came in at 2.1% year over year in June. A decline in the nation's CPI rate could amplify the case that the RBNZ is likely to remain on hold for the foreseeable future, perhaps throughout this year. Something like that could reverse some of Kiwi's recent gains. Kiwi dollar traded in a consolidative manner on Friday, staying near 0.7350, the upper bound of the sideways range that has been containing the price action since mid-June. As long as the rate is trading within that range, we consider the short-term outlook to be neutral. Having said that, slowing inflation in New Zealand could encourage the bears to take advantage of the range's upper bound. If they manage to push the rate below 0.73, we would expect them to aim for the next support zone of 0.7240. Another dip below the latter level could challenge the lower bound of the aforementioned range at 0.72. Now, as for today's highlights, the economic calendar is almost empty. The only noteworthy indicator we get is the US Empire State Manufacturing Index for July. As for the rest of the week, on Tuesday, besides New Zealand's CPI data, we also get the minutes from the RBA's July meeting, as well as the UK CPIs for June. On Wednesday, we have nothing major on the agenda, while on Thursday, the Bank of Japan and the ECB meetings will probably steal the show. Even though not much is expected from the Bank of Japan, the ECB gathering could be eventful, as there is a possibility for policymakers to remove the signal that the QE program can be expanded. Finally, on Friday, Canada's CPI data for June will be in focus. For more information, please read a full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.